Ladies and gentlemen, good day and welcome to Godrej Properties Q1 FY26 conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kshitij Jain. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on Godrej Properties Q1 FY26 results conference call. We have with us Mr. Pirojsha Godrej, Executive Chairperson, Mr. Gaurav Pandey, Managing Director and CEO, and Mr. Rajendra Khetawat, CFO of the company. Before we begin this call, I would like to point out that some statements made in today's call may be forward-looking in nature. The forward-looking statements are based on expectations and may involve risks. The outcomes may differ materially from those suggested by such statements, and a disclaimer to this effect has been included in the results presentation. I would now like to invite Mr. Godrej to make his opening remarks. Over to you, sir.
Good afternoon, everyone. Thank you for joining us for Godrej Properties first quarter financial year 2026 conference call. I'll begin by discussing the highlights of the quarter, and we then look forward to taking your questions and suggestions. Godrej Properties delivered another solid quarter, registering continued momentum in bookings, cash flows, and earnings. We've delivered our highest ever quarterly net profit of rupees 600 crore in the first quarter, a growth of 15% year-on-year. The residential real estate sector in India has been strong over the past 4 years, and we believe the demand conditions remain favorable. Our business development additions with a future booking value of over 90,000 crore since financial year 23 at favorable terms continue to allow us to scale our bookings and in turn, over time, our earnings. On the booking front, GPL achieved a booking value of rupees 7,082 crore from the sale of 4,231 homes with a total area of 6.17 million square feet. The booking value showed a decline of 18% year-on-year, but actually represented a 2-year compounded annual growth rate of 77%. This is the 8th consecutive quarter in which Godrej Properties has exceeded rupees 5,000 crore of booking value. The sales in the first quarter were driven by strong demand in several new project launches, including Godrej MSR City in Bengaluru, which achieved a booking value of rupees 2,426 crore, Godrej Majesty in Greater Noida, which achieved a booking value of just under 1,000 crore, and Godrej Tiara in Bangalore, which achieved a booking value of rupees 470 crore. Bangalore contributed more than rupees 3,000 crore, followed by Mumbai and NCR, both of which contributed over 1,600 crore to our sales. There were 6 new project and phase launches during the quarter across 4 cities with a total sales potential of rupees 8,500 crore. Collections in the first quarter grew by 22% to rupees 3,670 crore, and operating cash flow slightly declined by 4% to rupees 947 crore, largely on account of the relatively low deliveries we had during the quarter of under 1 million square feet against a full year target of at least 10 million square feet. In terms of business development, we started the year on a strong note by adding 5 new projects with an estimated saleable area of approximately 9.24 million square feet and an expected booking value of rupees 11,400 crore. With this, Godrej Properties has achieved 57% of its annual guidance for business development for the full year in the first quarter itself. In the first quarter, our total income decreased by 3% to rupees 1,593 crore. EBITDA grew by 18% to rupees 915 crore, and net profit grew by 15% to 600 crore. With a robust launch pipeline, strong balance sheet, and resilient demand, we are on track to achieve our bookings target of rupees 32,500 crore in FY26, and are also on track to meet our guidance across all other operating parameters. On that note, I conclude my remarks. Thank you again for joining us on the call. We're now happy to discuss any questions, comments, and suggestions you may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Puneet from HSBC. Please go ahead.
Yeah, thank you so much, and congratulations on a good start to the first quarter. My first question is if you can talk a bit about, of the new launches, what percentage have you been able to sell? And in your total sales, what would be the share attributable to you?
Thanks, Puneet, for the question. Essentially, if you see, most of our big launches have been in Bangalore. We launched this project by the name of Godrej MSR City in North Bangalore. We were able to sell close to about 2,400 plus crores, I think 26 crores in the previous quarter. And if my memory serves me right, in the first phase that we had opened up, with some inventory we had blocked, the total available was about 2,700 crores, of which maybe about 150 crores we had sort of blocked to do it at a slightly higher pricing. The next one was, another project in Greater Noida by the name of Godrej Majesty. In this one, in the previous quarter, we've sold about 925 odd crores. And I think even in this quarter, we've already sold another 75 odd crores. And this is part of some towers that we have launched, and it's going very well on the track. The third big launch that we had is in Yashwantpur. Yashwantpur approval actually came a little later. I mean, we got this approval close to 3 weeks before the quarter got ended. And we sold more than 400 odd crores, if I'm not wrong, probably 470 odd crores in the previous quarter. And it is continuing to sell as aggressive as that. I mean, if my memory serves me right, we would have crossed almost a similar number, already in this particular last month itself. So again, going well on track. And then remaining have been more or less like phase activations and all. So whatever we opening stock between the towers that we open or the floors we open, give or take between 70 to 90% is what we are selling. Consciously, we're holding some very, very prime inventory so that we can ride through some amount of pricing uptake. But we are seeing very strong demand, yeah.
Okay. And the share of sales? Yeah.
The question was the GPL share this quarter was a little bit lower than last year because of the large sales in Bangalore in a JV project. So that was 78% for the quarter.
78%. Understood. And secondly, if you can talk a bit about the environment in terms of deliveries. The deliveries was 0.8 million square feet. Are you seeing any challenges in terms of availability of labor, contractors, etc.? And is there a risk on any account on slight pushback in terms of project completions and collections and so on?
That's a great question. If I were to give you a sense of the execution piece, I'm delighted to share with you in the quarter one. We were able to increase our COC run rate. Just to give you a sense, COC in Q1 of the previous financial year was about 750 odd crores, and the quarter one COC was about 1170 plus crores. So we are seeing a very strong execution uptake, and yes, you're right, there have been historical challenges on the labor side, but for the last 9 months, we've been working on a complete execution turnaround strategy. And we worked on, kind of bringing our laborers into a digital infrastructure system, creating a sort of a roadmap to engage them better, and also relook at some of our contractor base. And through these initiatives, today our sites are able to consistently, month on month, exceed the targets that we are setting for them from a labor point of view. So yes, there might be some pockets of opportunities of major improvement still, but I think give or take in this quarter, we should be able to ensure that any gap on some projects from a labor strength also gets fixed up. So I think we might be an outlier, and if we continue on the drive that we are doing in the next 1.5 to 2 years, we will almost automate the engine, and we're also integrating a lot of tech initiatives to strengthen this overall execution piece.
But should it not show up in your construction-related outflows, which was 1,800 crore in 4Q and 1,460 crores this quarter?
Fair enough. See, I think, typically, I'll explain to you. See, typically our business has, if you see our historical numbers as well, typically quarter four has a lot of OCs that technically kind of come in. Quarter one, we just had 0.8 million sort of square feet of OCs, and we did a lot of launches in quarter four, if you could recollect, which in the initial days of construction, mostly about excavation and piling works, which are not from a COC spend a very huge item. But from a labor intensity and activity, so the materials don't get pumped in like steel, cement, doesn't get too much into excavation, but labor movement, truck movement is fairly high. So I think you would see that uptake in the coming quarter.
Okay,
I
understood.
think
And last,
we remain very confident of the guidance both on collections and deliveries. Quarter to quarter, of course, there can be some fluctuation.
no, fair enough. And secondly, on your BD front, you've been doing quite aggressively. If you can quantify balance to spend on what you've already acquired in terms of land payment dues, and how are you thinking about future run rates?
Okay, I'll take the first part, Puneet. For the deals which we have signed in this year, balance to spend is around 900 crores and around 1,000 or 1,200 crores for the earlier deals which we have signed in 25 and 24, which are milestone linked payments.
Okay. And this includes the 1,200 includes Ashok Vyar as well, right?
That includes one installment of Ashok Vyar which will get due for this financial year.
And I think your second question was on the future BD. Is that the question?
Yes.
I think we remain very optimistic on the, deal pipeline. So we would, we endeavor to add projects, especially in cities like Bangalore and Mumbai, and also to some extent even in Pune. And NCR acquiring few projects mostly on the plotted side, like Panipat, you would have recently seen an acquisition. And we've been very selective currently on the NCR acquisition unless we find the valuation very attractive. So you would see definitely very strong business development growth, but more calibrated, more about where the take-up rate can be very fast from buyout opportunity to launch and churn.
Understood. That's very helpful. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Abhinav Sinha from Jefferies India. Please go ahead.
Hi, Pirojsha, my first question is to you. So, in the opening comment, you have mentioned that demand conditions are pretty strong, and I guess even your sales should be higher this year, because we have seen some other developers also report very strong numbers in first quarter. But however, the industry data seems to be flattish to down. So how do we square these two things?
Yeah, I think, the demand conditions do remain quite strong in our view. I think comparing it to a time where perhaps, the demand conditions were quite euphoric may not actually give the best picture. I think we're following so far pretty much exactly what one would expect to see in a typical real estate cycle, assuming this is kind of year 4 or year 5 of that cycle, which is you do have the couple of years of kind of extraordinarily fast pricing growth. We've seen some of our launches, people have been lining up at 1 o'clock in the morning as though it's a music concert or something like that. So I think those are not conditions that are going to sustain indefinitely, nor probably should they sustain indefinitely. So I think we've now entered a period where prices have reset to a higher and quite attractive level. We're continuing to see strong demand at these levels, but I don't think at this stage of the cycle, we're going to see very sharp pricing increases or volume jumps from here. So I think it's more about steady growth from here. That seems to be playing out in most of the numbers, we're looking at. So I think as of now, certainly we're quite happy with the response we're continuing to see across the country in all our new project launches.
Okay. So secondly, on the BD side, so I noticed that this quarter you have done couple of area share agreements, and this sort of comes after a while, right? So where you were earlier doing almost all projects as buyouts. So is this like a conscious shift in strategy?
I think yes and no. I think as we get closer towards the mid to end stages of the upcycle, I think rebalancing a little bit towards JVs will make sense, but I think these frankly were more driven by kind of deal-specific requirements of the landowners, which are always a factor in deal structures, and we're seeing continued opportunities for outright purchases. So I think this year, again, most of our acquisitions are likely to be outright.
In fact, if you see the transaction, like the Panipat is a completely 100% buyout transaction. And the pipeline that we currently have is a mix of both area share, revenue share structures, but a lot of outright transactions. So I think it will be very opportunist basis. But the interesting part is whatever we acquire, agnostic to structure, our return metrics are intact, which means that the PAT margins that we always target as the main metric, and of course IRR is exactly the same threshold that we maintain for any deal construct.
Right. Gaurav, can you help us with some of the large launches to expect in the next, say, couple of quarters?
Thanks. Actually, we have a crazy launch pipeline. Depends on how much we actually can squeeze in. But just to give you a flavor of a launch pipeline, we will be very soon having a launch in Gurgaon. This is a 3.6 acre of land in Sector 53 and a very exciting project developed on a sort of a Japanese theme. Then we will be launching a first time a retail product, a new asset class and a very sizable one in Greater Noida. This is part of a very successful project of ours called Godrej Golf Links. We endeavor to launch maybe within the next 3 months. It could be within this quarter or early next quarter is the Worli launch. Things are going very strong on that. Approvals are more or less on track and hope to secure that one very soon. On the Versova, this is an acquisition we did last quarter. Delighted to share this will hit this quarter as a launch, one of the first fastest turnaround for us in Mumbai zone. We are also looking at finally launching one of our acquisitions of Indore. There is a lot of excitement in Indore market for Godrej Properties entering, and this should be a blockbuster within this quarter. Then we have some launches being planned in Panvel City. We are also opportunistically looking during the year something in Sanpada. We will hit a very big launch in, like Pirosha was mentioning, in Hyderabad. This was an acquisition we did in a very interesting market like Rajendra Nagar, and this has a very large booking value potential. We'll be launching one large phase within this quarter and will be a very sizable number. Then in Pune, we will look at launching Keshav Nagar. After a long time, we're going to re-enter that micro market. We have some launches here and there in Pune, like Mahaninjay. In Bangalore, we have a launch in, likely, if not this quarter, then next quarter in Thani Sandra. And further from there on, likely we will be able to launch either the next quarter or the quarter after the Panipat recent acquisition of previous quarter. The approvals are going very fast, so it is planned for Q4, but I won't be surprised if it hits even Q3. Then we have a 7.5 acres land parcel in Gurgaon, which should also hit within this year. We have a Greater Noida parcel that we had done an acquisition that is going very well on design and approval stage now. So that should also happen within this year. We have a Kharghar acquisition, if you remember, bought from in auctions. That will hit this year. Then we might be able to pull off, very early to say, but there are two Upper Kharadi transactions we did, which had a cumulative booking value logged in of 7,300 crores. We would endeavor to at least try and launch one of the phases of one of the land parcels. Then we have a launch coming up in Evergreen Square during the year, something in Raipur, the plotted development. We're trying internally to push it for a Q4 launch. And hopefully also within the year, you'll see the Ahmedabad launch. Then we have some residential opportunities in GGL, next to the retail plot. And then opportunistically, we might even launch more phases of Banaghatta. Basically, we'll enter Banaghatta, but the MSR city might open phase. So as you can see, it's a humongous pipeline that we built for ourselves, and which gives me a sense that we should, if we hit most of them well, we should comfortably exceed our guidance. But if we are able to get more of this, like the pipeline mentioned, then we might be in for a good surprise.
Great, Gaurav. Thanks and all the best.
Thanks.
Thank you. Ladies and gentlemen, to ask a question, you may press star and one at this time. The next question is from the line of Girish Chaudhary from Avendus Spark. Please go ahead.
Hi, good evening. My first question is on the business development. Now that you're running ahead of your guidance for the quarter, I was more interested to know on the land spend. This quarter you did around 2,000 crores of land spend. So how should we look at this number for the year as a whole? I mean, last year we spent close to 9,000 crores. And also, how should we look at the debt numbers for the year as a whole?
Thanks. So actually, to be very frank, it is very, the strategy on the business development side is, as we mentioned, even when we were releasing a guidance, is not really driven by a targeted must-have guidance, right? It just happens that the deals meet a metric and we're very confident of them being available for immediate launch. And I say immediate meaning next 6 to 12 months is when we typically go about it. As a rule of thumb, if I were to say that for every, say 1,000 crore worth of inventory, you can assume between 15 to 25% is your land acquisition cost in an outright. and it can be far lower if you do an area share or revenue share. So it depends on the deal construct. It depends upon the type of opportunities we get to see during the year. And this could be a number which for a quarter you may not see certainly a lot of transactions, like in Q1 you saw a lot of transactions. So really difficult to predict an absolute number because for us having them is not necessarily critical to maintain booking value growth. As you know, we have acquired a series of projects. I'm delighted to share with you that in the last 3 years or so of BV that we've logged in, we still have close to 60,000 odd crore worth of inventory to sell. And from a historical inventory, we have close to 1,14,000 crores of inventory. So BD, logically, what we're looking at is more about opportunistic, fast turnaround, and in micro markets where we see a huge potential and depth. So this will essentially drive, and most of it, because we have a very strong operating cash flow pool in the even in this quarter, we see we had like 947 odd crores of operating cash flows in spite of almost 400 crores of extra COC spend when I compare Y on Y. This is going to fuel our future growth in the coming quarter. So it's difficult to put a number if I were to be very specific. But yes, we will acquire a lot of opportunity, but based on very strong deal metrics.
Okay. On the debt, how are you looking at the debt
I think,
from here on?
Yeah, I think, again, it will depend a little bit on the quantum of business development we've done. But I think if you look at it, last year we did about 7,500 crore of operating cash flow on collections of about 17,000 crore. We've guided this year for 21,000 crore of collections. So of course, hope to see operating cash flows also at a very healthy level this year. So I think a lot of the business development should be funded by that. From a debt perspective, we've laid out an absolute cap that we'd like to look at for net debt of 10,000 crore. So we do have a fair amount of room, and even that would only take us to about a 0.5, a little bit above that year-end. So I think that there is more than enough sources of cash, both between operating cash flow and room to borrow a little bit if we see the need to in the short term. But I think the decider of exactly where debt ends this year will be how much beyond this 20,000 crore guidance we are able to do on business development. And that is honestly something that we don't have it's not that internally we have we must do at least 30,000. I think broadly we'd like to see a kind of replacement value business development, so roughly in line with our sales. And I think operating cash flows should be able to fund most of that.
Sure. The second question is on the construction outflow run rate. You earlier mentioned that you're running ahead of the COC run rate. So, basis your expected cost to complete, what can we assume the run rate for, let's say, for fiscal 26 and 27? Last year we had spent close to 5,500 crores.
Yeah, I would say that probably last year COC spend were about 3,500 crore, 3,700 crore, something like, if my memory serves me right. I think we should hit between, again, depends on how efficient we are able to capitalize on some of the start of construction, because, when we do an estimation for the year, it also kind of picks up our approvals coming for H2 launches, right? So depending on how quickly we can get those approvals on track, we will take 5,500 to 6,500 crores.
Last year was around...
No, I'm talking this year.
No, last year was higher, around 5,500.
Last year was... This includes what all, Rajendra? Just 1 second.
Yeah.
This includes all the development costs or just the COC spend?
All that. COC spend.
So give or take 30 to 40% growth on the base value we should have.
Sure. Thanks so much.
Thank you. Ladies and gentlemen, before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Parvez Qazi from Nuvama Group. Please go ahead.
Hi, good afternoon, and thanks for taking my question. So my first question is on the pricing front. Now, you did mention that demand remains strong. We are able to sell 70-80% of our launch inventory pretty soon. So what would have been, let's say, the like-to-like price increase that you would have taken in Q1?
So in most markets, and of course, there are some exceptions of some projects where we may not have increased prices, but most projects in North, we've been able to increase price between 2 to 3%. we've been able to increase between 1 to 2% in Bombay, marginally, basically less than 1% in Pune market, and about 2 to 3% in South market. This is what I'm saying, like-to-like project which had already been launched, and we were doing sustenance sales. And our sustenance sales, as you would know, is about close to 2,760 odd plus crores in the last quarter.
Sure. The second question is, I mean, over the last 2 years, obviously demand has been pretty good. We have seen an increase both in land prices as well as the price realization on the various projects. So in your estimation, I mean, an IRR for a project acquired recently, how will it compare with, let's say, BD deal that you would have done 3 or 4 years earlier? Will the IRR be same, higher, lower? Just want to get your views.
I think the project that we had acquired in the initial stage of the cycle, so let me clarify, the underwriting standards when the cycle was starting up to its peak as well, were exactly the same that we had even in pre-COVID. We were always underwriting in conservative sort of basis. That's been more like a governance principle that we set when we buy land. So those have of course seen a very dramatic uptick both from an IRR perspective, overall PAT profile, and even PAT margins, right? And the deals that we acquired even in the 6 months, at the moment, more or less, most of the deals we are seeing an uptick in IRR. Now, the deals that we will continue to acquire, the endeavor is going to be that whatever we've been underwriting, agnostic to market cycles, we should maintain and improve upon that. So, to put it very simply, we're not really, when we look at a deal, we don't really go aggressive and underwrite basis aspirational life cycle numbers. We do what is like a launch scenario, as we call it, which is basically today rate, if this rate does not increase for next few years, what is the margin profile IRR looking like? And that's how we underwrite. And if the market supports you, improve upon it. If the market doesn't support you, you at least for the very minimum try and maintain those margins to whatever extent possible.
Sure. Thanks and all the best for the session.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on the touchtone phone. The next question is from the line of Ashish Mendikar from JP Morgan. Please go ahead.
Yeah, hi. Thank you for the opportunity. I have 2 questions.
Sorry to interrupt, Mr. Ashish. May I request you to use a headset to ask a question?
Okay. Is this any better?
Yes, please go ahead.
Yeah, wanted to understand the completion trajectory FY26. So shall I ask all the questions in one go or like?
Go ahead, please go ahead.
Yeah, but just, your line is not clear. Maybe.
Did you ask for completion for this year? Is that your question?
Yeah, completion trajectory for FY26.
Sorry, not able to.
Sorry, the line is not clear at all.
Hello, is this any better?
Yes.
Yes.
Okay, so was looking not exactly just the number, but what would be the completion trajectory going ahead, starting with FY26? My second question is.
Sorry, we're not able to hear you.
Mr. Ashish, you are not audible.
I'll take it offline. Yeah, sure.
Yeah, okay. Thank you.
Thank you.
Thank you. The next question is from the line of Parikshit Concall from HDFC Securities. Please go ahead.
Yeah, hi, team. My question is on the NCR market. So last year you clocked 10,000 crores of sales and this quarter 1650. So, and Gaurav, I think you sounded a little cautious on the NCR market on new business development. I could sense that you're saying there are not many attractive deals available. So in terms of growth this year from pre-sales in NCR and on BD, so how are we thinking?
I think, Parikshit, fortunately, we do have a very strong pipeline in NCR market, and a very diverse pipeline. We have a very strong presence in, especially in Golf Course Road micro market, the main epitome market for Gurgaon. And then we have a very spread out projects. I'm talking bigger numbers, and we have a lot of projects in Noida, Greater Noida market. So I think we have enough and more to kind of sustain the growth for next 18 to 24 months. And of course, not that I am in any way discounting the opportunity that NCR market will present us. In fact, there is one deal which is in a fairly advanced stage, but we are negotiating. But you don't, when you run a sort of a principle of risk-adjusted return, you don't really get very emotional about the investment, right? I mean, you just see that if you have great pipeline and a headway to deliver great growth for next 1.5 to 2 years, you kind of sit back and wait for the valuations to come at a level. And sometimes it takes 2-3 months, sometimes it can take 6 to 9 months, right? But when it does, we do go very aggressive. If you see about 2 years back, it was exactly similar, but then we started acquiring in a matter of months, we did 4-5 acquisitions. So I think right now there is a sort of a opportunity where we want to negotiate a little smartly and get those deals to our terms. But thanks to good work of the teams in the previous 4 to 6 quarters, we have enough and more to sustain the growth.
But again, in terms of like what will bring down the negotiations, the pricing.
Sorry?
So you said that you will look for more attractive deals. So what will bring the deals more attractive?
I couldn't hear the last part of the question.
So I think what we're saying is that we have a strong pipeline in NCR. So even on the 10,000 crore base we've had for the last 2 years, we expect to show growth on that this year. And I think Gaurav's point is we don't feel the need to be chasing deals if we're finding the valuations unrealistic. There's no challenge to just not doing deals for a few months until the right opportunities come. But certainly NCR is among the markets that we will look at new BD this year, and we do have a plan to ensure strong growth in NCR this year.
Okay. And just the last question on Delhi. So any update on how we're more midterm, how's the Delhi market now looking at? I know there are new development plans and are being discussed and drawn out. So but from medium to long term, do you think that Delhi can become a equally lucrative market for GPL?
Yes, of course. I mean, Precious, that we're quite excited about the Delhi opportunity, and there is definitely a strong supply constraint in the entire Delhi because of the complexity of the regulations, the land market, how that operates. And I feel that, once we bring Ashok Vihar to the market, which has been going a little slow historically from an approval point of view, but yes, there is a very strong opportunity for us to unlock massive amount of upside in that particular project. We should be able to re-rate the entire Delhi. But Delhi, if you frankly ask me from a Ashok agnostic to, if I remove this transaction per se, Delhi always has a huge land constraint, which is why Gurgaon property market kind of had the uptake. Otherwise, the Gurgaon market would have not existed. It was essentially people migrating from Delhi in search for better high quality development. But as and when we're able to bring Ashok Vihar, I feel we'll be able to get a very significant price premium once we launch that project.
Okay, I just missed if there is any update on Ashok Vihar. So what are the launch timelines now? I mean, you've been making the payments, but in terms of launches, what is the stage of approval and clearances?
Frustrating as the honest and candid answer is that, it's been a frustration for us that we've not been able to launch this project for a while. And I think we in fact mentioned very candidly in the previous earnings call as well that there has been set of approval authority issues in the government setup on which department grants approval, where and how. There has been some views from the court also on the overall tree cutting policy of Delhi. So it is difficult to predict how exactly the court will decide and how exactly the authorities will sort of move in forward. But if I were to give you a sense of what the feeling on the ground, what was happening about 6 months back, when the governments were not really aligned, I see there is a good positive movement. We see a good amount of clarity coming, at least from the departments to begin with. There has to be some movement to the court side, which is frankly not really in anyone's control. But fingers crossed, I mean, if things continue the way they are, we remain very, very positive for a launch. But I don't think so. At the current state of data that I get to see, I'll be able to give you a very accurate timeline for a launch. But if I were to give a sense of relative, about a year back, things were looking much more difficult and things are looking much more positive now.
Okay. And just one last question on the launches this year. So if you can help us quantify what quantum of your launches are impacted by the NGT issue, which is currently under court's hearing and final judgment awaited. So how much of your NGT would have got the Sanjay Gandhi National Park issue and currently so that issue has impacted in Mumbai, and basically approvals on the environmental clearance that the state will do a center with that issue I'm talking about. So any update on that?
Yes,
and also on the ground?
I think this 40,000 crore launch guidance we've given for the year is meant to be a number that we should be able to deliver, even if there are a few setbacks on the approval side. So we remain confident of that 40,000 crore numbers. In the first quarter, we did about 8,500 crore.
Okay. And even on Bangalore, there is a ground rent issue which is going on the charges, what has to be paid on, even on OC and on new launches. So any update on that, whether that will impact any of our Bangalore launches?
No, I think, look, there's an endless number of these kinds of issues in the sector. So I think these have to be taken in stride, and project teams have to find solutions. But the number we try to provide from a guidance perspective is one which we think has adequate buffers that we can absorb some of these delays and hits and still achieve the number we've provided.
Sure, team. Thank you. Thank you, Gaurav. Thank you, Pirojsha.
Thank you.
Thank you. The next question is from the line of Ashish Shah from HDFC Mutual Fund. Please go ahead.
Yeah, thank you. So just wanted to get a sense on any recent trends that you can highlight on footfalls, conversion rates, or how long it is now taking to convert inquiries to sales. Let's say vis-a-vis where we were a quarter or so back in at least our key markets like Mumbai, Pune, Bangalore, maybe NCR. Anything that you can share on that front?
So I would say that with the exception of NCR about 9 months back, the conversions and the excitement euphoria was more or less almost similar in all markets that we were operating. I mean, there was never a crazy uptake, neither a sort of a compression of any sort of either a walk-ins or conversion. I think there was a sense of lot of media narrative, if I were to put it, about 9 months back on NCR, and we just became a little bit cautious from our own end to just revalidate, but we never saw any sort of a dip in any sort of either the walk-ins or conversion ratios. So if you look at the most recent example is the launch that we've done in Greater Noida. If you see and understand that location, it used to be historically we priced at around 7-ish, 8,000 or 9,000 at max sort of a location, and there has been a huge supply constraint in the Greater Noida market because it's heavily controlled by the government. The supply comes from auctions only. And we were able to secure a project and launch and sell 925 odd crores at a 14,000 plus rate. If I'm not wrong, probably 14,500 it was the average realized price. And we had fantastic walk-ins, fantastic conversions, and we're still seeing walk-ins happening in that side. So I think the real challenge for any market is not very the sentiment right now. I think it's very positive. There was some amount of narrative, I would say, was holding till January, but especially after the government doing certain changes in the fiscal policy, the environment started looking more positive. The interest rate reduction, again, frankly, doesn't really impact our segment per se, but just kind of removed any negativity that certain corners were making. So I would say similar conversion ratios, similar walk-ins. In fact, in some projects, we are breaking records of walk-ins. So like if you go to Bangalore, the organic walk-ins that we've seen in that side is one of the best ever numbers we've seen in any project across India. So yeah, I mean, there are some new benchmarks we're trying to create within the company as well. So I don't see any change.
And especially, let's say, in case of Bangalore, this hasn't changed much in the last month or so because there has been some concern of IT services related slowdown, etc. So have you seen anything particularly in markets like Bangalore, which probably get more affected by IT services? Any sort of slowdown in that sector?
I think on the contrary, I mean, when you launch a project, there is a typical dip in sales after the first few weeks of login, right? But the Yashwantpur launch, Godrej Tiara, which is continued its sales after 450 odd crores in Q1, is kind of hitting a similar number already as we speak, right? So I don't see that, and I just want to caution one thing, that the news that we hear about one or two companies doing it, which can be a trend, is mostly on a very different job segment versus the Bangalore story. There's a lot of growth if you see on the office leasing side of the last 12 months. And, in fact, if I'm not wrong, the last year was the best ever leasing record for Bangalore and overall for India. So yes, there are pockets of companies and segments which would get affected, but they're equally being offset by higher paying jobs from global capability centers and the like. So nothing really felt on the ground. And in fact, we are seeing very strong demand for our product.
And I think our Bangalore sales last quarter, of course, was the highest of anywhere in the country, and also I think they have been the highest for any developer in Bangalore.
Right, sir. Just one last thing. We did talk about strengthening our execution capabilities. So just if you can share a little bit more into how we are, either externally or internally in terms of our own execution teams, any concrete measures that you could highlight, because I think we are now embarking on a level of scale which may need much better execution abilities than in the past.
Absolutely. So, about 9 months back, we had created an internal program which focused upon complete ramp-up of execution capabilities and deliveries. And through that, so we worked, there was a specialized team working on it for about 6 to 9 months on that particular project. And we identified 15 modules, as we call it, which were like areas of opportunities to strengthen for us to even, sort of accelerate some of the good work we've been doing. So just to give you some idea into the depth of it, we've worked on the labor strategy very exhaustively. We realized that in India, labor is a very, very seasonal thing. There's a very huge attrition issue. And we identified, after meeting about 800 plus laborers, our teams went on ground, met 800 laborers per site to kind of decode the problem statements of their life. Why don't they like to work for a longer time? And some of the very superficial understanding that industry has, which is money, were not really the root causes of why attrition is very high in the labor market. So we could curate certain programs, and I'm delighted to share, but these are very early days for me to be to say that this exactly works like that. But for example, in Holi, we made some very specific interventions on a site, and normally in Holi we get to see a dip in labor percentage from say X to say about 70%, and sometimes even 65% of that. Because the first time, in spite of Holi, we saw pre and post Holi numbers at 98.7%, which was very extremely heartening. And we're seeing month-on-month growth in our labor volume. We in fact worked on creating a digital infrastructure to bring our laborers on board, and we have created a series of schemes to help them feel more engaged and at place. Then we've expanded a contractor landscape in a big way. We've onboarded a lot of tier 1 contractors. So whether it is Leighton working in the Godrej Reserve project, KEC working in the Aristocrat project, Alu working in another project. So a series of large contractors who are not operating in our ecosystem have been added, and contractors who were working very well in our system have been strengthened by giving them cash flow support, giving them very timely payments by tracking it centrally from here, so that there are no, sometimes bureaucratic hurdles that comes in the road of execution. And then empowering teams, strengthening audit controls, but at the same time creating autonomy and empowerment to take certain decisions on the ground, and centralizing and procuring items at bulk. So now we have lifts that we buy at bulk, we buy tiles at bulk, we buy paints at bulk. We in fact have a segment by segment analysis of how much we want to buy for the next 6 to 12 months. So I think these are just 3-4 things I've talked about. I mean, it's a chapter itself, but yes, we worked a lot on strengthening our execution capabilities. In fact, restructuring some of our teams. We have increased pay grades of certain specialized projects with the PAT lock-in is very high. And I think combination of these has been giving us some very early wins. But yes, this is one part of the value chain you can't be complacent, and you need to be always on top of it, always innovate and always push the edge. But if we continue on the road that we are now sort of got into, with some reasonable confidence, I can say we might create some benchmarks in the industry.
Thank you. Thank you very much, sir.
Thank you.
Thank you. The next question is from the line of Puneet from HSBC. Please go ahead.
Yeah, thank you so much. And, just, I don't really want to put you on a spot, but if you were to look at your share price versus the opportunity in the market, where would you want to deploy money? Promoter shares, anyways less than 50%. Would you like to comment on, how would you be thinking?
Yeah, thanks, Puneet. I think we think, but maybe it's because of where we sit, but we clearly think the share price is at a kind of absurd levels, given the kind of growth and overall operational momentum we've delivered. The promoters have actually bought back some shares on the market over the last 6 months, and if this weakness continues, may use it as an opportunity to continue to do that. I think certainly I've never felt better about the current position of the company and the overall direction, both in terms of an absolute basis and how we're performing vis-a-vis our peers. So yeah, I think it looks to us like a good buying opportunity. We have acted on it over the last few months and may do some more of that if this weakness persists.
And buyback versus business development opportunity? Which one do you think is more remunerative?
I think, we have so much opportunity as a company that I think, buybacks is when to my view, more something to consider if you're throwing up huge amounts of cash, don't see great deployment opportunities for it. If we can continue to deploy at 20% plus IRRs, as we seem to be continuing to have opportunities to do, I think it would be more sensible to deploy that. I think these share price, movements can correct quite quickly. It was not that long ago that we were at, very significant premium to where we are now. Sure, we'll get back there. So we certainly, if it gets much weaker than this, it might be something that we would have to consider seriously. But for now, I think we'd like to deploy all the capital for operational growth and performance.
That's it. Thank you so much and all the best.
Thank you. The next question is from the line of Varun Julasaria from B&K Securities. Please go ahead.
Yes, sir. Thank you for the opportunity. I just wanted to check what is the kind of unsold inventory that we have in the books currently, split between ready to move and ongoing?
When you say total inventory, or you want to say that launched but unsold?
Launched and unsold.
So say about 27,000 crores.
Okay. And sir, I just wanted to get your thoughts on the sustenance sale. Like this quarter, like 65% of the sale came from new launch, and we just did around 3,500 from sustenance. So, like, what is the expectation going forward for the sustenance sale?
I think we were 39%, if I'm not wrong, we were 39% at 2,700 plus crores of sustenance sales. And I think, generally what happened is it's very project specific, right? So in some of our launches, we've done a complete sold out, right? I mean, if you look at Tropical Isle, Gardenia, these are sort of sold out projects, so they don't really happen at all on sustenance. There are some projects we've held some inventory to kind of max out the pricing opportunity. So those keep on being available in the market. And then there are some projects which had a potential to do only 70-80%, they will continue to do sustenance. So I think we have a very healthy sustenance ratio. It sometimes may look percentage-wise little weaker, because if we get launch approvals on time, then the launch volume is so massive that they don't look very big from a percentage terms. But from an absolute perspective, we've been consistently doing very well on the sustenance in projects wherever the inventory is actually available.
I think we keep a regular track of things like unsold inventory as a percentage of total inventory, unsold inventory as a percentage of expected sales months, etc. So I think we see all of those data looking very healthy at the moment.
So just to give you one live example, in Golf Course project, we did a launch in Godrej Miraya, the first of the series, where we did about 497 crores at the launch. And since in the last 6 months, that 497 number has become now 778 crores, So this was a very conscious strategy to sort of hold some inventory and then there was another example by the name of Lakeside Orchard, which did 268 crores of launch. Then again, we continuously did about another 100 odd crores each quarter. And today the cumulative BV stands at 1370 crores. So I think it's a very project specific intervention that we tend to take a call on basis risk and reward. And then whichever inventory is available, they do very well in the sustenance where we decide to hold.
Okay, sir. Thank you. Just one last question. What is the amount of collection yet to be, which is pending to be collected based on the sales which we have done in the past couple of?
So, pending to be collected, the revenue, but pending to be collected is around 51,000 crores of collection is pending to be collected.
And how much?
Sold but unrecognized.
And how much would be the cost to be incurred on construction for those projects, like which are?
I don't think so. That we'll have to do a project by project math. So the indicator would be to look into our pro forma. I think there you will get some indication on the cost. If you do some indication, because every project will have a different cost structure.
Oh, okay, sure. That's it from my end.
Thank you.
Ladies and gentlemen, we'll take this as the last question for the day, and I now hand the conference over to the management for closing comments.
I hope we've been able to answer all your questions. If you have any further questions or would like any additional information, we're happy to be of assistance. On behalf of the management, thanks once again for taking the time to join us today.
Thank you. On behalf of Godrej Properties Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share, and subscribe for latest upcoming videos.